Welcome, dear traders. Stocks have started the week in the red. Yesterday, all three benchmark indexes closed the session with losses. During today's Asian trade, futures on the US stock indexes were still declining. Asian stock indexes also slid into bearish territory, tumbling to a two-year low. Investors are anticipating US inflation data for June. Judging by the movements in the equity market, they are bracing for gloomy results. This week, traders are also looking forward to the release of the second quarter earnings reports of the largest US companies, so the earnings season is in a full swing. Analysts note that volatility in the stock markets is going to be rather high during this period. Comments of Fed officials will also be in the spotlight. In their speeches, investors will try to find clues about the next step of the regulator. Several policymakers, including the Fed chairman, have already spoken in favor of a 75 basis point rate hike at the July meeting. However, Fed Reserve of Kansas City President Esther George was the only policymaker who voted against a 75 basis point rate increase in June. She said yesterday that the rate increases should be carefully balanced against the state of the economy and financial markets. Investors were also alarmed by the fact that even the White House press secretary provided comments about inflation. According to Karine Jean-Pierre, Wednesday's CPI inflation data is expected to be highly elevated. The US dollar enjoys luster with the traders as the oil prices and stocks are down. The European Union is dealing with the energy crisis, and China is trying to curb the coronavirus spread. The greenback is moving up, especially in anticipation of an aggressive increase in the interest rate amid rising inflation and recession risks. The US dollar index has already climbed to above 108.45, reaching a two-decade high. Naturally, the current high is not the limit. The US dollar is now the most popular safe haven currency. During the Asian session, the greenback was steadily going up. The index is moving further away from the support level of 108.07, aiming at the resistance level of 108.57. As the US dollar rises, commodity prices are also getting higher for buyers in other currencies. Such a surge in prices is quite negative for Japan. According to economic reports published today, Japan's producer price index for June exceeded expectations. Compared to the last year, the index jumped by 9.2% due to increased import duties of commodities. Hence, it has been growing for the 16th month in a row. Nevertheless, the Bank of Japan supports the weak yen. Sometimes the Ministry of Finance expresses concern about the fall in the national currency. Policymakers are largely worried about the sharp moves of the yen in the foreign exchange market, and today Minister of Finance Shinichi Suzuki brought up this topic once again. Chief Cabinet Secretary Minister Hirokazu Matsuno said that the government should pay close attention to inflation, which adversely affects purchasing power. The yen usually asserts strength amid the policymakers' comments. In the Asian trade, the yen was still weaker than the US dollar. However, the yen is up as a safe haven asset. The Japanese currency, which is sensitive to changes in the US government bond yields, added gains thanks to a decline in US treasuries. Following the sell-off on Wall Street, the 10-year bond yield fell below 3% overnight as investors also bought treasuries as a safe haven assets. Today, the dollar-yen pair is moving in the range of 137.00 and 137.53. It's now trading at 137.27, and today the pair has advanced above 137.21. However, the risk of a further increase is quite high as long as the yen is trading above the support level of 135.35. The Aussie is a losing stream versus the US dollar. The AUD USD pair is trading at 0.6722. The Aussie has a a high correlation with the US stock market, so a fall in Wall Street is a bearish signal for the Aussie. In Australia, the consumer confidence index has been falling for the 8th month in a row. Against the background of rising consumer prices and the prospects of a rate increase, the index amounts to 83.8%, which is the lowest level since April 2020. Investors are also concerned about China, which has imposed new COVID restrictions this week. As a commodity currency, the Aussie lost momentum due to a drop in oil prices today by 1%. As seen, there are now plenty of negative factors for the Aussie. The AUD USD pair is now trading in the downward channel of 0.6711 and 0.6747. It's crucial to keep your finger on the pulse if you want to enhance your trading results. InstaForex team strives to make the most relevant video reviews for you. Subscribe to our channel and be ahead of the curve in learning fresh market news. See you soon.